Hello, everyone. Good morning. Y'all welcome to Morning Market Review. Um, and I would still like to welcome those that are joining for the first time, those that are joining us, those that have been joining us. You're all welcome. This is Morning Market Review, where we tend to look at how to make daily profit from the market every day between Monday to Friday, 8 a.m. to 9 a.m. So we are all welcome, and you know, this is the end of the year. This is December to be precise. So as we are wrapping up the year, you can wrap up with some level of profits before the market uh, goes on break, and then also before the market resumes, so that you can prepare yourself for a very good festive period. So the Christmas is all and it's very close. So without taking too much of our time, let's just quickly go to what we have for us today. So I'll soon be sharing my screen so that I'll be able to show us some few things that can help us to, make us make some level of profit in the market. And with everything happening with the United States of America, so we will tend to look out for how to maximize the instability of economies so that we'll be able to make some good profits from all the instabilities in the economy. So if you can hear me, please just let me have a thumbs up from you guys so that we can have a very smooth session today. So I'm waiting for the thumb up. So if you can hear me very clearly, I think we have okay, Felix and you. Felix and you has been a dedicated follower. So good to see you. So good to have you on this meeting. And let me have one more, then I think we are good to go. So let's have one more question. Okay, so I can see we have Stanley Body in the building. All right, so let's kick off. Let's kick off the Sutra Trader. Thank you all, thank you all. So let me just quickly share my screen. So allow. All right. So the way the market works these days is just that we need to be able to see how we can take advantage of what is happening in the markets. Now we are going to start with we are going to start with some instruments, but before then, let me just quickly show you what I have for these. Okay, so right here I have the economic calendar, and economic calendar tells us what to look out for the week or for the month, even for the day. So now for the week, we have yesterday was Monday. Yesterday was Tuesday, and then we have news that came out on Tuesday also. Now, NFP came out yesterday, average hourly earnings, non-farm employment change, the average hourly earnings, a whole lot of data. So October data came out, and then we have December data coming out. So, it's actually this is not how the market has been, okay, Ebuabo. So this is not how the market has been, but because of the few changes in the US economy, what are the few changes? Because number one, we have the lockdown that actually scattered, the events we are expecting from, the United States of America. So that's part of what affected the market, and those data were delayed to be released. Okay, so but eventually they still have to release this data so that we can know what is affecting or what is happening with the United States of America's economy. So right now, this news came out of good, bad, neutral. But then good, bad, neutral, good, bad, neutral. We can see that there was some quite movement in the market yesterday. So if you want to look at movement that happened, so number one, we have the gold. Gold tried pulling up yesterday, And after it pulled up, what happened? What happened is that after pulling up, you see, it started coming back. Went above the moving average, started coming back. Now it's above the moving average. There is a rule I normally use to show people, how to take advantage of some moves in the market, which I've shared so many times. But then I believe we have some new persons here which would want to learn that strategy also. All right, my name is Gabriel Riton from the Abuja office of Rally Trade. Don't forget, if you cannot trade by yourself, there are different means you can actually still use to trade. Okay, so we have the copy trading system. Just, in school, copying is not allowed. But then in trading, it is legal. So you can copy. They used to say copyright. So you can copy anybody as long as you have an account and then your account is funded. So you can copy anybody. So it saves you the stress of analyzing, saves you the stress of looking for what to trade, saves you the stress of, what is affecting dollar and the likes. All right. So if you don't have all the time to analyze and to pick your trade, remember there is copy trading that you can, easily just switch to. So let's start with gold. Look at gold. I was telling someone yesterday, if I'm to trade gold as of yesterday, I've been looking at putting some orders, before the news, and you know, eventually it played out in that scenario. But then I didn't go live yesterday. So, but then here we are. It has happened and it has happened. So we are looking for what is going to happen today, right? So for today, expectation basically is just that. So we expect price to do up and down, but then do we have any fundamental for today that can easily change the movement of price? Well, let's see and let's check. Okay, well, no major fundamental apart from the speech coming from the FOMC member, which is Waller. Waller is going to be giving a speech in the market. He's due to speak about the economic outlook at the Yale University CEO Summit in New York. And, basically, he's going to answer some questions. The questions that will be asked, and also the answers he's going to be giving to the questions determines what their economy is looking like. So since he's a FOMC member, you expect any of his response to actually move the market in a particular direction. So expect that to have some moves. Then also remember GDP for NZD. GDP for NZD as gross domestic product, which is a very important data, and we want to look at whether the economy is actually doing well or the economy is not doing well. So look out for this news by 10:45. You can try to trade, GBP, NZD, NZD, USD, NZD, JPY. Those are, pairs that news, tends to move a bit on. Then also on Thursday, we are looking out for the monetary policy summary coming out for the Great Britain pound, which is the UK, and expectation is for them to deduct, from their interest rates. Okay, a reduction in the interest rates, shows a bad currency. An increase in the interest rate shows a good currency. So, depending on the outcome of the data and the bank rate votes is happening alongside with the interest rates because the vote determines what the rate will be. All right. So still talking about the interest rate on Thursday, we have Euro releasing their interest rates on Thursday by 2:15. And then also we have that same Thursday, there's going to be a press conference from the Euro. For USD, there's going to be CPI. Okay, this was actually a delayed data also, which will be coming out on Thursday. So I'm just trying to prepare you for what is going to be happening in the market so that when you see a move, it is not an unusual move, right? It's not an unusual move. US 2000, tried pulling up, it fell, and oil fell all through yesterday. Okay, don't mind my indicator here. So oil fell all through yesterday, and then there's a gap up for oil. And every time there's a gap, you expect price to try and fill the gap. There's a gap on USDJPY which we are still waiting for price to come and fill. All right, this is AUD USD. Yesterday it was just up and down. No major move, GBP. Okay, we are still going to be looking at all these guys one after the other. So let's have these. Let's have these. Okay, the sessions. All right, so 1 hour. Then this. Let's have this for each one. All right. So basically, this is a USJPY. As of yesterday, it's just up and down. But then today, what do we expect price to do? All right, so we are going to be looking at them one after the other. So I'm going to start with gold. Then from gold, we move to currency. From currency, then we go to indices. So that then I know quite a number of persons trade coffee. Quite a number of persons trade coffee. So coffee is one instrument that is very, very amazing. So let's quickly run with these and let's see what's going to happen. So this is my default setting for checking the market. All right, so we have this here. So this is gold. This is the chart of gold. This is what gold is saying. Now, as somebody that wants to understand what's going on here, from what we have here, you see, price got to this resistance, try pulling back. Now, yesterday it was trying to get back to the resistance, but it couldn't. So as of this morning, it was going a bit close. Now, if I'm looking out to trade gold, just like I used to tell people, always look out to buy gold. All right, always look out to buy gold. Now, somebody wants to ask me, at what point should you be buying gold? You see, gold is quite an interesting instrument that if you don't have enough trading capital in your account, you just mess yourself up. Okay, so and if you don't want to mess yourself up in this market, you need to have a good fund. Okay, have a good fund. When I say good fund, I'm not trying to say that with 100K, 200K, you can't even trade. No, you can trade with those money, but there are some instruments that are meant for those money. Do you understand? Right. So in trading gold, and you want to be using some reasonable lot size, using a reasonable lot size, you also want to check. All right. Check the amount you have in your account, because the truth is this, there's money to be made in this market. All right, there's money to be made, but then you need to be disciplined so that you can be patient. A disciplined man cannot be patient. I think it's fast faster also. If you are not patient, you can't be disciplined. So now the way it works is just that always look out to buy, but then don't buy after price has gone up. All right, wait for price to fall first before you buy. All right. Now, most people say, okay, how will I know at what point? Now, basically, what gold normally does is that if it can easily break a previous high, if it can easily break a previous high, you expect gold to come and test that high. Okay, that's one thing I've noticed about gold. If it can easily break a high, then you expect it to come and what? To come and test the high. So with what gold has been doing, gold broke above 4,259. And after breaking above it, you see it ranged, pulled up. Now, so I say, so that means you won't trade, when it was doing all these things. It's not that you won't trade. If you want to trade, why not? Just pick a trade. But remember, if you don't have enough capital to be able to hold the trade, then I think you are going to actually lose in the market. And, consistency is what we are looking for in this market. We are not looking out to, be a one-time champion so that the market will knock you out, right? So if you don't want the market to knock you out, there is what you must do. Okay, what you must do is knowing when to enter and when not to enter, all right? Now, some of us knows all these things. It's just application that I think is your major issue currently. So in applying those, principles you have been taught, if you don't know, you don't really know exactly how to apply it, which is why we are here teaching you every morning to let you understand that if you can do it this way and you do it this way, then you are disciplined. You'll be good to go, right? So as price is trying to come down now, all I want to do is I'm waiting for gold at two places. So the first place is from this moving average, and then the second place will be from the support here. If gold can come back to the support, so if it comes back to the support here, then I'm looking out to buy. Now, if gold comes here to the moving average, I'm also looking out to buy gold. I'm looking out to buy gold. So, this is 30-minute time frame. Looking uh inside what my 1 hour time frame is telling me. Right? Remember, this is the resistance. Gold is not a respecter of resistance most of the time. It always breaks resistance. So you need to know when it will break resistance. So if it's breaking resistance, then mind you, you can decide to set an order above the resistance. Okay. So you can set an order above the resistance so that any day it tries breaking it, you can be able to follow the breakouts. Okay. Set an order above the resistance. Then while price is trying to fall, you can set an order at this point here. So I'm just trying to mark out some levels of the chart. Yeah, this is also gold. And you can decide to do an order at this point. So let me check my 1 hour time frame. You also need to check your each of the time frames. So most preferred place, I would rather prefer this point here. Now somebody wants to ask me if I put another year, what if price take the order and then it starts going down. If it starts going down, now you don't need to think twice. Immediately price gets to this point, just pick another order. Then by the time it's going up, you maximize your profit. Now, for risk management, so you can have stop loss for your orders because most times you tend to not have enough capital to hold your trade and you now want to leave it for hope. All right. So you can have a stop loss for your order so that I think this one is even very close. Okay, somewhere around here is fine. So your stop loss order there. This is your entry, this is your entry, this another entry. All right. Now this entry here is tentative, depending on what will happen around this zone here. So depending on what will happen around this zone. So let's see. So if price can find its way to this point, I'm expecting something to happen for gold. So if something happens, what do? You make something to happen when something is not willing to happen or ready to happen. All right. So let's move on with this. So I think to some extent I've explained to you how gold should react for today. So if it falls to this point, this is a possible point of entry. Then if it drops, another possible point of entry. So now in drop, if somebody say, okay, can't we sell? One of the wrong orders to be doing on gold is a sell, basically. I know some people do sell gold and they know where to be entering their sell. But for me, as a trader, I know the behavior of my instruments. The behavior is that it will always go up. So if it will always go up, then let me respect myself and just follow what price we always do. So by following what price we always do, it's easier. It's easier, all right? So what will happen is that follow the behavior of the instrument you are trading. Remember what I said. Follow the behavior of the instrument you are trading. What is the behavior of gold? The behavior, what I mean is that the movement, the direction of the instrument. So anytime I'm talking about behavior, I'm talking about the trend of the instrument. Okay, character, trend, behavior, trend. So I want to know the character of the instrument. So what is the character of gold? The character of gold is more of what? Up. So anytime it's coming down, just know that it's trying to find strength to be able to push higher. Right. So that's my take on gold for today. And I hope you have learned one or two things So there are different possible point of entry for gold. So if it's coming down, just look back out to those levels of entries, and then you'll be fine. So any question on gold? So if there's any question on gold, let's have it now. And if there's no question, let me just quickly move to uh, another instrument. Another instrument. Okay. All right, so in the absence of no question, moving straight down to indices, which is US 2000. Now, why I started with all this is because these are instruments that I've traded over time. I understand their behavior, I understand their character, per time. I was telling some persons, I said, for me, I've gone on break in trading some of these instruments, but then there are still opportunities in the market. All right, so opportunities in the market. So with what price did yesterday, so let's have it. So for yesterday, can you see what price did? Price came down, tried going up here, right? Got to the moving average, what happens? Price pulled down. Now, I was telling someone that because of the NFP coming out, if you have your order around here and your take profit before 50 moving average, then for your order, another order will be somewhere around here and then somewhere around there. Now, but basically you want to see what the market will do during those particular time. So eventually it paid out. It's a risk that had to be taken. All right, it's a risk that has to be taken. But then after doing that, so for today now, what are we still expecting this guy to do? All right, what are we expecting it to do? Basically, the way it's going, I think I'm still looking out for price to come to somewhere around there, if you can get there. So now, do you want to do instant execution? I will just advise you to, put your pending order above this previous high, which means there's something that rejected price from here. Put your pending order above it, put your take profit. Then for where price is currently, because price is at the support. Price is at the support. Look at what price is doing there. You see this point here. It is just like a false breakout here. And from there you have candlestick formation, like a Morris star kind of formation. Price pulled up, it's rejected the air, through up. So I'm actually expecting price to find its way. Now there's going to be something like what we call a chart pattern kind of thing. But then let me just quickly do this here. So checking 4 hours time frame here, you see price came back to my moving average, retest. So the way it is now, are we expecting price to fall or we are expecting price to rise? That's why I ask you to just put in your orders, above and below the current price so that you are safe from what price wants to do. This is 30 minutes time frame. For those that like the smaller time frame, your orders will be above those points here, then the take profit can, it will be about somewhere around there. See, so there are different rule of execution, different rule of entry, spring green, then let's have line green. So spring green and line green. So entry, exit, then you remember what I said here. This what you are seeing here was like the first breakout. Then price has gone back. Now price is looking for how to go back to where it has been coming from. So another thing I want to do basically is with what price has been doing, most of the stocks in in US they have been doing well. So since they have been doing well, the best thing to do is just to follow their trend. But then they have been falling recently, and I think it's just based on what Trump has been doing lately. Trump has scattered everywhere. He has scattered the market. He has scattered the rule of the market. But then market will still try to find time to settle back to what it has been doing before. So with what I have said so far for US 2000, are we really expecting price to do too much? Now, don't expect too much from the market this season, right? This season, don't expect too much. But then, as you are trading, ensure that you have your stop loss in check, ensure that you have your take profit in check so that once upon a time you will not be in profit, and then reverse will now be the case. So always set your entry, set your exit. Very, very important. Set your entry, then set your exit. It's very, very, very important. All right. So any question for me on what we have said so far for gold and US 2000? Right. So right, just like I said, we are going to move from commodity, from gold to indices, then from indices to currency. So the first currency I'm talking about is USD JPY. So let's have it. USD JPY refresh. Now, USD JPY is one interesting instrument that, you know, at some point I wanted to, I wanted to stop trading USD JPY because it started misbehaving. But then what did I do? I had to just, keep on trading it. When the character of an instrument looks like it's changing, you need to understand that it's actually going through a season, right? Okay, so Adebayo Adesina, can you also trade chart pattern instead? All right, so for Adebayo Adesina, yes, you can trade with chart patterns. So that's depending on the pattern you are seeing on the kind of charts. Okay. So because every chart has their pattern of movement. So if you see chart pattern, ascending triangle, descending triangle, curve, head and shoulder, all these guys, when you see them, you can use them to trade. Okay. But also remember this, still have your stop loss in check. All right. Still have your stop loss in check. So that's what I'm going to just advise you for that. So okay, so let's have one more indices. Okay, US 100. Let's have one more indices, US 100. So US 100. Gotcha. So the same analogy I used for US 2000 is what I'm coming here to use for US 100. So let's see. All right, you are welcome, Adebayo. You are welcome. All right, so still proceeding forward to what we have for us. All right, so for US 100, the same analogy we used on the US 2000, right? So most times you just look for how to put your entry above the previous point. This is a previous high here. So put your entry above it, then your take profit before the next level of resistance. Then also we are looking out to sell, which I don't really advise on sell on some instruments because it can be disastrous. Now, so this is fast time frame. Please, let's revisit our entry very well. Let's revisit our entry so that we don't have a bad entry. Now, looking at what price is doing, price has gone below the moving average. This is US 100. For those that don't know, US 100 is 100 stocks put together, and then you are trading all of them as one instrument. You are trading all of them as one instrument. So with what is happening here, there is what is called the law of first touch. The law of first touch. What do we mean by the law of first touch? The law of first touch states that when price breaks below the moving average and is trying to go back up to the moving average, and then is about to touch the moving average for the first time, wait to see the touch. Wait for price to touch the moving average. After touching the moving average, look out for a sell trade. All right, so vice versa for the buy signal. vice versa for the buy signal. So with what we have, so this is fast time frame here. So price is trying to go up. Anything that makes it to get to the moving average, which is coinciding with like a previous point of resistance, which we have around here. See, so you need to just let's see. So their price has been rejected very well from this point. So even if you want to set anything like an entry, your entry should be above. Follow the black line for entry. So let's have this. So follow the black line for entry, then you have it. So your entry price certainly will be somewhere around there. Now, why am I putting it here? So that I want to avoid any unnecessary false movement around this zone. Okay, any unnecessary false movement around this zone. But then you can take a risk to just, let's say buy trade and put your take profits before this point here. But remember, let's go back to other time frame and let's see. So you can just take a risk, put an entry here, put a take profit. So you put the take profits somewhere around here, and then anything that makes price to come here, that's another point of entry for you. See, when it comes to entry and exit, it is based on what you are seeing on the chart that determines your entry and also that determines your exit. Okay, so based on what you are seeing on the chart, so and also try to follow candlestick pattern, and they will help you a whole lot. They will help you a whole lot. So this is what I have on US 100 currently. You expect price to break where it is currently. Expect it to put higher, and they pull it higher. Just like I checked my fast time frame. I want it to come back to the moving average. Then from there, expect history to repeat itself so that it can fall right on the higher time frames that we are. This is D1, so most likely price will pull up. Most likely price will pull up, and if price is pulling up, expect it to come to this point here. This point here. So if you can get to this point, that is what we call the Morris star, which is a reversal pattern kind of thing. But then if price did not pull above this moving average for today, expect price to come to this point for today. Follow the red line. So expect price to come to this point, most likely get to this point here. So in getting to this point, you don't need to think twice, pick a buy trade from that point, okay? All right, what moving average are the red and blue respectively? I'm using 50 and 21, just check. So I'm using 50 and 21. This 21 moving average, the red is 21 moving average, and then the blue is 50 moving average. So those are the two moving averages I'm using. All right, so now two things. The close of the candle for today determines your buy on US 100 or determines your area of entry for US 100. Don't forget that. So depending on where price is going to close out, depending on what price we do. So this is 15 minutes time frame. So zooming out, you see the clear entry. This is a clear entry with a clear exit. Now, you see this point of resistance, M30, H1. So this point of resistance here. All right, so those are, you see, anytime you are trying to plan your entry, plan it in a way whereby if a price wants to misbehave, you'll be out of the trade before the misbehavior of price, right? So that's what we have for US 100 for today. So I've talked about gold, I've talked about US 2000, we've talked about US 100, and I think we need to quickly move down to currency so that all right, Mandu Timothy, are they EMA or SMA? Now, when you say EMA, you have exponential moving average. When you say SMA, you have simple moving average, or EMA still means weighted moving average, while your simple moving average is still the same as smoothed moving average. So now I'm using EMA. Let me just show you properties. So it's exponential, right? And every application is to the close. Okay. So I'm using exponential moving average, which is EMA moving average. All right. Now there's another moving average I would have showed you guys, but maybe the next time I'll be coming up on this meeting again. I'm going to show you the moving average that you can use, for your scalping operation. There's is direct smaller moving average that works with the movement of price directly, that can give you what you are looking for. But then, I'm not too much of a scalper. I'm much of, a day trader. Scalpers can also be called day trader, basically. Right? It's just that their style of trading and their style of trading is just, what I cannot try to incorporate into my trading style. Right. So let's have Euro USD. Okay, for those that want to trade Euro USD, if I'm going to advise you on Euro USD, so if I will advise you on Euro USD, it's looking like Euro USD wants to do is normal procedure. What is this normal procedure? It will fall, after falling, it will go back up. It does rise, so it's expected for it to fall. So now we are looking how to sell Euro USD because dollar has been very strong. Dollar has been very, 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 very strong. So let me just quickly try and find some reasons why dollar has been, doing this misbehavior. So let's have the latest news here. All right, Asian Stocks Edge Iron Tech recovers economic uncertainty waves. Okay, UK inflation slides to 3.2% before Bank of England raised decision. Right, this was just 6 minutes ago. Thailand central banks, they cut their interest rates. SACO applies. SACO, that's all. Indices and Quest, Bonzo, UK inflation, Vector, Bitcoin, around $87,000. Okay. Medline raises suspense. Okay. EOLOS, normal. TikTok monitored green activity through third-party tracker. Okay. Dollar drifts there. Labor data. Okay, this was 1 hour ago. But then dollar is finding its way up now. So oil jumps on Venezuela blockade. Okay, but then did we see the oil? Okay, so I think that'll be the next instrument after Euro USD. Okay, this guy is still falling. So oil jumps based on Venezuela blockades. South Korea central bank says upside inflation risk with a weaker one. Let's be interested in this. Okay. So I think for now, these are what we have. So let's see. South Korea central bank. Oh, I thought Japanese central bank. Okay, then all right, but this is before. All right, so okay, so this is what we have basically when it comes to the news. You need to know how to read the news so that it will not catch you unaware, so that it doesn't catch you unaware. So just know how to read the news, know how to do this. Okay. So with what is happening in the markets, you see dollar drifts there, 2 months low. Okay, so let me just quickly open this. Now, but in case you need more of this news, just go to investing.com. Then you find your way around it. Just focus on what you are looking for. You can easily search for any instruments you want to look for. adventure I want to do for EUR USD. So this is euro dollar, you have FX. So this is euro USD. I'll just search for it, then so it's still trying to open. Okay, so euro US, let's have this out. Euro USD, okay, so currently Euro USD is on the downside, which means Euro USD is selling. So let's have the news and analysis. Let's have the news and analysis for Euro USD. News and analysis, basically. All right, so dollar drifts. These are the news. Dollar is against peers after better than expected US job data, which means dollar just calmed down. We did not sell too much. Dollar splits ahead of, this was 21 hours ago, 22 hours ago. Okay. So let's quickly move to analysis. So the technical analysis, right? Now you can read, about the instrument you want to trade. This how we are looking for is most of what we do. So these are technical indicators. On 1 hour, I say strong sell, strong sell. All right, so strong buy for monthly time frame. Okay, but then let's leave all this, move all the way down. Okay, so depending on the moving average you are using, simple exponential, simple moving average, then exponential moving average, pivot points. Now, you see, these are ways to develop, your analysis strategy. Let's check for analysis and opinion. Analysis and opinion. So analysis, Euro USD, its key target, what comes next? This was 14 hours ago. Okay, let's hear what this Anna Radomska say. You can see her name here, Anna Radomska. So, okay, Euro USD, it's not one, but two projected targets. All right, so let's look at this here. The red declining range support. Okay, so wow, there are so many. One, so you have a channel pivot point here. So this is a channel pivot point for Euro USD. Then this was another breakout here. But then it went back into the channel. It has maintained the channel. So with what is happening on this guy, what do you expect? So Fibonacci retracement. Okay, let's see. There's Fibonacci. From this point to this point, there's Fibonacci. And this 4 hours time frame. So now you can go to your chart, you replicate the same thing, this 4 hours time frame, zoom out. Okay, so Fibonacci retracement from this point all the way down to this point. Now, if you don't know what I'm doing, then you need to be trained. Okay, if you don't know everything I'm doing, you need to be trained. All right, that's why Rally Academy is here to help you. All right? And we have not closed for the year. We are still training people. So if you have not been coming for classes and those special classes, those advanced trainings, you will really be missing out. All right. So with what we saw, for okay, so we have the channel that was strong, and then we have this. See, so this is it here. So in having this on 4 hours, this was what was projected. So now if it can come to 1.16925, somewhere around there, expect it to bounce back into the channel. But if it's not bouncing back into the channel, then just let it out. Okay. So let it out. Let it out, let it out, let it out. Okay. So just let it out there. Now, you see, we are making an headway here. Technical analysis is interesting to the point that what you expect price to be doing most times, you might not really see it, right? But then it is what you don't expect price to do that price eventually will do. Now, this was like a support for price, but it looks like it's broken it. So let's zoom in here, see what is happening. All right, so this is what we have. Leaving all these. So if price falls to this point, expect it to find its way back. There has been time where this guy has fallen out of shape. There has been time it has fallen out of shape. Okay. There has been time it has fallen out of shape. So if you're expecting anything on this guy, so this is it here. So falling out of shape, went back into shape. Now it has fallen out of shape. What are we expecting? Are we expecting it to fall back into shape? Okay, yeah. Could it be a false breakout? Most likely, it can. Yusuf Abdul Kadri. It can be a false breakout out here. Look at what happened. But then for this guy, there's a sharp movement downward. But yeah, there's no sharp movement. Price was just doing his up and down around here. So you can't compare this kind of move with this kind of move here. Then also what happens here can be compared. This was a sharp move downwards. This was a sideways kind of move downward. But then it was a sharp move downwards that price is doing. So it comes all the way down to Fibonacci level at 50 here. It's somewhere we can expect price to try and fall back inside the channel so that we know that it has corrected itself. So for Euro USD, my take will be still for the fact that I think just wait for price to give you a pattern. If you can see a pattern, this is 1 hour time frame. So if it's coming down, if you see any reversal pattern, then you can follow it, right? So follow it to go back inside the channel, which we have. Follow it to go back inside the channel that we have, and you'll be fine. Okay, so that's my take on Euro USD. Wow, time is fast spent with our analysis here, but let's quickly jump to oil. Then from there, I think any other instrument we want to do, we can get it done. So while I was scrolling through the news platform, I saw that oil jumped based on Venezuela's cutout. There was a cutout for Venezuela oil tanker movement, so oil shipment. Okay, you still have the card. Okay, no. Okay, just let's finish with oil. Then I think I'll just take a scale. We'll take a scale to know. Okay, are we going to be doing currency, or we just do one more commodity? Then we call it a day. So this is 1 hour time frame. Let's have 4 hours time frame. This is 4 hours time frame. So if you want to trade oil, basically with what has happened here, with what price has done here, and yeah. So this is the gap. But I think I can have my indicator here now. Okay, but let me have a clean chart first. Then let's have the other block here. Okay, so basically now this shows, let's have the fair value warrant. Then the rate of structure gap. So now with what is happening, where is the gap? Look at the gap here. This ash color is the gap. Then H1. If you need this is something that can help you. Bishop has this, one of his indicator. So now with what is happening here, this is the gap, right? Price is trying to pull up. It seems like there's another form of gap here. Most likely that price has not covered. Now, this is 1 hour time frame. So with expectation, if price can come back to this point here, which is New York session high for yesterday, let's expect it to fall back. And this gap needs to be covered. It needs to be covered. When will the gap be covered? That is a question that most people always ask. If there's a gap, when will price cover it? Well, based on experience, there are some times that immediately the market moves, you have price to just cover it immediately. And anytime price is not moving, you have price to just take its time, which means it can take 1 day, it can take 2 days, it can take 3 days. In short, it can take up to like months before price will come and cover those gaps that it has created. Uh, so please, let's ensure that we trade wisely and safely, all right, with all this little information that I've been able to just pass out to us. So let's look at the normal, just moving average indicator kind of thing. So talking about moving average indicator kind of thing, let me zoom in properly to see what's going on. So this is where this guy ended. We have this here. So if you are looking at trading this, you can put a sell stop at where the gap happens with a very reasonable upside. Then let's have another entry above the moving averages. Then this is 4 hours time frame, right? So when I said above the moving averages, most likely we are coming here and you are coming here. All right. So these are part of the things you are looking out for. All right. But then just remember to be carried along in what is happening in the news. Okay. So let me type for oil. So 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 for Brent oil, you see that I'm trying to go up. The Brent oil moved today. Mm-hmm. All right. So where is the news and analysis? So let's have news and analysis. Okay, so we have just a few minutes more. All right, just this is the last thing. Let's call it a day. See, oil jumped 1.5% at Trump Venezuela blockade stokes uncertainty. Let's really jump into this news. 9 minutes ago, 1 hour ago. So you can just read up on the news so that all right. So as oil has jumped, blah, blah, blah. Singapore, December, oil prices rose more than 1% after US ordered a total and complete blockade of all sanctioned oil tankers entering and leaving Venezuela, raising fresh geopolitical tensions at the time of concern over demand. Basically, oil has not been really getting the demand it needed to be able to pull higher. So oil has actually been falling, it has been selling. But then with what is happening now, it seems like oil will try to find its way up. Okay, you look at this oil price settled near 5 years lows in the previous sessions on progress in Russia, Ukraine peace talks. Okay, which means it has been selling. So it has created 5 year lows. In the last 5 years, it has created a series of lows. But then, because of the peace talk between Russia and Ukraine, it has not been able to go beyond the last low it created. So let's quickly look at this here. Let's start with the weekly time frame. This is a weekly time frame here. All right, so let's move this up. All right, so this is oil. See the way it has been creating your series of down, down, down. This was 2021, 2021. This was 2020. All right, so 2020, December 2020 into March 2021, it was here. Then all the way to 2025 of March. Look at where it was. Now, as of today, look at where price is, okay? So it is settling around this zone. Now, for technical traders, they'll be looking out to buy it, right? But then right now, you don't know what the blockade will cause. Yeah, in as much as there's going to be increased demand and shortage of supply because of the blockade, right? But you want to look at the total output of Venezuela oil into the uh, oil supply and oil wells. So that's where you want to check before you will now take a decision of whether you are looking at a long-term buy or a long-term sell, because oil has actually been selling. It has been seriously selling. All right. So with this point of mine, I hope I've been able to make you understand that information is what determines your decision in this market. Right. So thank you so much for joining Money Market Review. Do have a very good trading day ahead. Thank you all.